Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Asian stocks and European futures edge lower ahead of today's US CPI, leading into the Fed's December decision. Zara owner Inditex misses profit estimates but says sales are off to a good start in the holiday shopping season. Plus, Emmanuel Macron is understood to be aiming to make a decision on the next Prime Minister within 48 hours amid rising internal pressure.
In the meantime, quick check on these markets. Red on the screen when you look at the futures picture. Underperformance right here in the UK with the FTSE 100 down about 0.3%. Eurostock 50 futures as a whole down marginally by about 0.1%. But as we have that kind of watch for the new French Prime Minister, 105 on euro-dollar. We'll see if that actually holds. And of course, it is CPI day, as Anna mentioned. 10-year at 4.23, almost 4.24, we'll call it, on that U.S. debt. The countdown to the opening trade starts right now.
Wednesday the 11th, good morning. As we've been hearing, it is CPI day in the United States. That's likely to be the main focus of markets. We've got a few more central banks to get through. We've obviously got the ECB to come tomorrow, plus also the Bank of Japan and the Fed. But you can almost, I swear, smell the Brussels sprouts. Christmas is coming. We're almost there.
Maybe in your house, Guy. I'm sure Kriti doesn't indulge in Brussels sprouts. Anyway, let's
What
keep
is a Brussels sprout?
Yeah, exactly. We'll have to explain that in the break.
Let
us keep to the CPI agenda. I'm not sure how we got to Brussels sprouts from that. CPI 0.3%. That's the core reading. That strips out the price of Brussels sprouts, Guy, and other foodstuffs. So core 0.3%. Expecting it to be that for 4 months. The headline number is expected to tick up month on month or year on year. We are expecting those numbers to go up a touch, just underlining, I suppose, the stalling nature of the inflation story in the United States. But all of this matters because we're asking ourselves, are we going to get a cut in December? Yeah. And Christopher Waller has told us that this is one of the data points that could influence that.
What's so surprising here is that we're hearing this narrative in the data, and then yet when we had so many of these conversations yesterday at our Women, Money and Power event with Ann Walsh, for example, of Guggenheim, every guest we had said there's a reflationary backdrop, that we could actually expect a pickup in inflation. Even Donald Trump, in an interview with NBC, had mentioned that tariffs could mean end costs for the U.S. consumer, and yet we're still talking about a Fed that is looking to cut this month. The logic is staggering.
Cut, one more, done. Then what happens?
Yeah.
Is that what happens? Torsten Slock earlier this week, or was it last week, talking about the fact that maybe we should start thinking about whether or not the Fed's going to hike in 2025. A lot of people see him as the sort of basis for their economic thoughts in terms of how 2025, certainly 24 progressed into 2025. The numbers out of the States continue to be very, very strong. The CPI is just one piece in the puzzle.
And I think the market is still assuming that we do get a couple of cuts next year. So possibly December, possibly next week, but then a couple next year. But is that absent any contrary commentary from the Fed? And the Fed doesn't want to get into that conversation today.
Can I just rewind a year? Just think about where we were a year ago and how many cuts we had priced in for 2024 at this point, going into
6, 7.
It was enormous.
Yeah.
And it hasn't delivered. The US economy has continued to surprise. Do we continue to see that surprise today?
But is part of the logic there as well, is if you cut, you're creating more room to hike down the road? Is that the logic for increasing more cuts into 2025?
Well, you just juice an economy that's already running pretty hot in terms of the numbers. Like, it's absolutely amazing at the moment. You've got the Atlanta Fed estimate for GDP for the fourth quarter will be 3.3%, according to Torsten Slock. 3.3%. This is an economy that's running at close or above potential right now.
Well, it speaks a lot, too, I think, to your point, the consumer resilience, but it also is maybe showing up in spending habits, which brings us nicely to the earnings story that we got this morning out of Inditex, major fashion parent company, owner of Zara, Mango, others that you may not be familiar with.
No idea.
None of your shopping, but certainly brands I'm a fan of. They had some pretty strong earnings there. Their online store and online sales grew 9% over the same period last year. People are shopping. Maybe that's a little bit of that holiday prep, but it's working for Inditex. We'll probably see that reflected this morning.
Yes, they do seem to have missed, though, don't they, in terms of those numbers and the past. But looking through the statement, there wasn't anything very negative in there. There wasn't any explanation as to why things might have been sluggish. So we'll see whether the market takes those estimates very seriously. They are increasing their investment in logistics, which I found really fascinating.
They're really good at this.
Right, so they're supposedly really good at it for a long time, and they are now talking about an exceptional investment in logistics, and we'll see where that takes us. Apparently, they have many celebrity collaborations, and that's been quite a recent innovation or introduction at Inditex, while others have been doing it for a long time. Kriti could tell you that, Guy, but I will this morning.
I'm living vicariously through the shopping habits of Kriti Gupta.
You're welcome, by the way.
It's quite all right. But they are the omni-channel company. When you buy something, how often do you take it back? Where do you take it back? How does that happen? That process is really good.
Yeah.
At Inditex relative to its peer group. I'm not talking about the quality of their products or anything else like that. The back office, it kind of runs very well.
There are other companies in the UK, though, that give you 2-hour delivery slots. I'll just point that out.
That's handy. Well, I was going to say Zara.
Because that's essential, isn't it? I've got to have it within 2 hours.
No, but you know which 2 hours it's coming.
But sometimes
which on our sleep schedule, that's pretty essential.
Totally, and sometimes that is very true. And sometimes you do. Sometimes you need a quick holiday party invite. You need a quick outfit. I'm sure this is an experience you can relate to. This is where it comes in. Zara also, but to your point on Zara and Inditex, they've gone ahead and done self-checkouts as well, which I think is crucial in terms of kind of minimizing that cost, not just on logistics, but on staffing as well. And Zara
that's where the labour shortage issue comes in, isn't it?
Yeah.
And you're certainly seeing that already in supermarkets. It's interesting that's now creeping out onto the high street as well. 48 hours. So apparently by tomorrow night, we're going to have a new French Prime Minister. The last time when we got Barnier, eventually, it took absolutely ages. There is a Barnier cabinet meeting, I think, happening right now as the outgoing administration kind of ties things off a little bit. But the hope is that Macron, it's his hope that he can deliver a government that survives beyond July. There's this idea that he's going to be able to create something within the centrist groups that will allow some stability, that will allow this Prime Minister to carry on until the next French presidential election.
So his centre, the left, and some of the centre-right, can he build something? The Socialists are talking about an exchange of good practices, which would in effect mean both sides promise to hold off. So you agree not to use emergency legislation to get a budget through Parliament, and at the same time, all of those opposition parties agree not to bring it to a no-confidence vote or not to vote in favour of a no-confidence vote. And that does sound a bit more sustainable if he's got the numbers to get there.
But that's why this, and we're seeing this on our screen right now, why the contenders are really crucial here. Francois Bayrou is one of the leaders in terms of this running simply because he's within the centrist faction, as you pointed out, but he leans kind of on the left side of it, and that's where the socialist piece, this is where Macron and Natal are trying to break up that leftist faction so that we don't have a repeat of what we just had with Michel Barnier and eventually get this budget passed through. But the 48 hours deadline, I think, is interesting there.
Yeah.
Will they meet 48 hours? Are the French usually on time? I don't know.
Definitely not going down that road. French roads are lovely. Anyway, let's talk a little bit about what we've got coming up on the show. Laureline Renard-Chatelain, Fixed Income Strategies to Pictet Wealth Management, joining us. We'll talk there, of course, about what is happening with the CPI number, what's happening with the shape of the curve in the United States. But we need to talk about that French story as well. Andrzej Domanski, Poland's finance minister, is going to be joining Ollie Crook out of Brussels. Elise Badoy, head of research EMEA at Citi. Tim Ash is going to be joining us a little bit later. We're going to kick off on Syria there, but there's so many angles that we can cover with Tim a little bit later on, so very much looking forward to that conversation as well. CPI dominates, though.
It does, and that, of course, coming up at about 1:30 p.m. UK time as well. It's not the only thing happening. Today is actually a fairly full agenda, maybe a lot of effects in terms of the bond market and the currency market. I've got my eye on the Bank of Canada rate decision as well, simply because the currency has been so volatile in the fallout of Donald Trump's comments there in terms of the tariff story. Maybe the Bank of Canada may have some commentary around that decision coming up at 2:45 p.m. UK time as well. 6 p.m. UK time, we've got that U.S. 10-year bond auction talking about that volatility. At the same time, it's coming after, by the way, that CPI report. So we'll see how much demand there is for that. We've got a Brazilian rate decision, got an OPEC monthly oil report, and then Adobe earnings as well. Yeah,
on the subject of the rate decisions, it will be interesting to see if Canada wants to talk about something that is hypothetical at the moment, because we haven't had any detail about what a tariff would look like. But we know that President-elect Trump wants to talk about tariffs and wants to either use them as an opening salvo or apply them. So far, central bankers seem to be in two camps, some who are willing to go there into that hypothetical territory and others who are saying, no, we need some facts on the ground before we're sort of price takers on the tariff side of things. That's one thing that we should mention. The other thing is oil, and there's a focus on oil today. The White House considering, according to our reporting, tougher sanctions on Russian oil, and they don't take Russian oil at the moment anyway, and there are price controls and all sorts of other things. But this is really interesting because this is in the end of the Biden administration. Could they even go after the foreign buyers of Russian oil, which puts them up against India and China, which is a whole different prospect? And it seems like a big step to be taking in the final months or the final month of your administration.
Does this make life easier for Donald Trump in some ways? If you have really tough sanctions already being applied, does it make it easier to remove them? Is it a bargaining chip that actually will work maybe for Donald Trump as he enters power at the beginning of next year?
Yeah. at a time that the spigots are going to open likely on the U.S. side as well. He also made some comments overnight as well that if you are if you're willing to invest $1 billion or more in the U.S., he will get rid of permits and licensings and all that. It's just basically a door wide open. I wonder how many people will capitalize on that.
Yeah, pretty hefty price tag, but yeah. I guess in return, you get maybe potentially quite a lot. What else do you need to know this Wednesday morning? Let's run you through the details. Israel has stepped up its attacks on military sites in Syria, hitting hundreds of targets and sending troops deeper into the country. The Israeli military claims to have neutralised most of the country's strategic weapon stockpiles to prevent them falling into the hands of terrorists. Bloomberg has learned that President Biden plans to formally block the $14 billion sale of U.S. steel to Nippon on national security grounds. This, once the deal is referred back to him later this month. The U.S. Steel says the deal represents a lifeline, warning it may shutter some operations if the merger collapses. And President-elect Trump has picked Andrew Ferguson as his chair of the Federal Trade Commission. The politically charged role is currently, of course, held by Lina Khan. Trump says his pick has a proven record of standing up to big tech censorship and supporting freedom of speech. Ferguson is currently one of 2 Republicans on the FTC's 5-member Antitrust Consumer Protection Board. 2 deals didn't go through yesterday. Yeah. Effectively, the steel deal didn't go through. You've also got a grocery deal as well that's not going to be happening as well. It's interesting that deals aren't happening at a time when everybody's getting very excited about the fact that they are about to happen.
Yeah. But this is the Trump effect, isn't it? This expectation of deregulation, which is almost accelerating some of the regulation around these deals. And the grocery deal that you mentioned is an enormous one, by the way, just for international audience. It's Kroger and Albertsons. Kroger's kind of the, I'm trying to think of the, kind of a Waitrose, I would say, equivalent of the United States.
Where they sell Brussels sprouts, yep.
I don't understand this obsession. We can't get into it. I don't have time for this morning. But Albertsons is one that's specifically in the South and in the West Coast. So the fact that this was supposed to kind of bring both of these 2 major players under one roof on both sides of the country, and for that to not get passed through, because that would help, in theory, the argument against this is make equal pricing on across the country, because it would be one conglomerate. For this not to get through is, as you can see, showing up on the stock price.
Yeah, so we'll watch that in terms of how the stocks have been and will perform. It is interesting because Andrew Ferguson, yes, you've heard the words of President-elect Trump. He's talking about this as a free speech kind of appointment, and you can apply that to tech, and you can think about this meaning more M&A. But on the other hand, there are other elements of the Republican Party, J.D. Vance, for example, who've been quite outspoken in countering tech power and sort of channeling that more populist line as it concerns technology companies.
So I read the Ferguson story this morning, and I read it twice, and I was trying to figure out what it actually meant in terms of what the regulatory framework is going to be going forward from here. And I'm still not entirely sure. And I'm not. I still don't understand yet what the Trump administration's line on this is going to be, because it feels really confused. Yes, there's this idea that we're going to see deregulation, but you listen to Vance and you listen to others within the party as well. It's a very different line.
And there'll be Trump in the room and there'll be Elon Musk in the room, and his view also perhaps something we need to factor in terms of tech.
Absolutely. And Andrew Ferguson and our reporting suggested this as well, that when he was FTC commissioner, he dissented from Khan on things like non-compete clauses, which sounds very nerdy, but it's important in the context of the labor market. So that's actually something that the Fed may pay attention to if we do see more of that on the non-competes as well.
OK, it is 7:13 here in London. Coming up on the programme, London's IPO drop to 20th place in global rankings, with the value of listings this year trailing Luxembourg and Oman. We will look into the reasons behind the drop. The rise of the Middle East, certainly a feature of that story. Also, the rise of private markets, perhaps. We'll talk about that. Plus, global airlines are expecting record passenger flow in 2025, according to IATA head Willie Walsh. He's been speaking to Guy. We'll bring you that conversation. Up next, it is US CPI Day. We'll be joined by Laureline Renaud-Chatelain, who's fixed income strategist at Pictet Wealth Management. If you have questions for our guest, then please do get in touch. IB plus BBTV Go. That is the function to use on the Bloomberg terminal. This is Bloomberg.
We've had a lot of speculative issues this year. And we have a little bit more certainty next year. So, half the world's population of the Western world went to the polls this year. We had this tiny election in November.
Tiny.
Tiny. We've got still some major conflicts raging. As we look through to 25, maybe we have some more certainty.
If you don't have a mindset of saying, how should we be thinking? How should an investment team think about AI? I don't know that nobody has the answer, but if you are not thinking about it, you're going to be left behind.
I've seen estimates of potentially $4 trillion in private credit going forward relative to where we are now. So we could see a doubling of the size. And I think one of the elements that would potentially drive that is a way for retail investors to somehow move into private credit, which right now that's really not happening. It's at the very beginning in some cases, but that will also drive that development and make it more, shall we say, the democratization, if you will, of private capital.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today.
Some of the influential voices speaking at Bloomberg's inaugural Women, Money and Power event in London. We were there. It was fun. Back in the studio today and looking ahead, focused on the CPI print out of the United States later today. Forecasters are expecting the data to show a fourth straight month of firm increases in prices. This at the core level. I know you focused on Valerie Teitel with the details.
That's right, Anna. One of the last big data points of the year before we close the books on 2024 is this U.S. inflation print out today. We are expected to see a slight tick up in the headline annualized reading to 2.7%, but the market's reaction is going to be based on this core metric, especially this month-on-month reading. We have gotten a string of 0.3 readings recently, and that's important, Anna, because a 0.3 month-on-month takes us farther away from the Fed's 2% target. If you flip on, we've actually gotten a 0.3 now for 3 months in a row. This could be the fourth month that we do get that 0.3. There are some analysts out there who are shrugging this off, saying a lot of this is driven by seasonal factors. But if we're going to see something that derails the Fed path going forward, it will be an upside surprise in this reading. Many out there do think that the Fed's cut next week is very much cemented in after the payroll report last Friday. But it would be this reading that maybe impacts the movement forward for the Fed. The market is also on tetherhooks for just anything that could dent this optimism when it comes to the U.S. market. We've seen a surge in small business optimism. That was yesterday, alongside a jump in consumer confidence. What we've also seen, if you can flip on, is a surge into U.S. ETFs. If we look at the yearly flows into U.S. ETFs, they have crossed now the $1 trillion mark for the year, Anna. A lot of optimism into the U.S., a lot of money flowing into U.S. assets. It could be perhaps the risk event today that could derail this optimism as we head into year-end.
Valerie, thank you very much. Bloomberg's Valerie Teitel with a reminder that we're not done with all of the data just yet. Now, sticking with that inflation theme, let's bring in Laureline Renaud-Chatelain, fixed income strategist at Pictet Wealth Management. Laureline, nice to speak to you today. Thank you so much for joining us. So what does this print today on CPI, what does it or could it mean for December's interest rate decision from the Fed? I think there's an 80% chance now in the markets that we get a cut in December from the Fed, but I suppose if this were particularly strong, that could shake that expectation.
Yes. Thank you for having me. So exactly, I think if we have something closer to 0.4 month-on-month, that's something that could derail a bit the expectation of the market of a Fed cut in December. But looking forward to 2025, we believe what is very key is if we have some tariffs that are imposed by President-elect Trump, because that could derail also over the medium term the core PCE fall that we expect.
Are you assuming that the Fed starts to somehow factor in the impact of tariffs even before any tariffs are fully announced? Because that might take months and months, maybe even more than a year, depending on which countries you're talking about, depending on negotiations that are happening. And in all of that time, would you expect the Fed to at least acknowledge it's something that's making them pause?
So they have said so far that they are going to monitor, obviously, all this possibility of tariff. Powell has sounded a bit more hawkish, I would say, recently. But then they say that they don't want to front-run policy decision from the government. So our expectation is that if they go and see some tariffs coming in, even though it's not full-speed tariff, probably they pause and they just wait to see if more are coming.
What is the risk that the Fed does nothing in 2025?
It's not an option, but in our scenario, we have 2 additional rate cuts.
Feeling confident about those?
So far, so good, yes, in the sense that I think we have the tariff problem, but we have also the deficit, and we believe this is also something that the president-elect is going to tackle maybe later in the year. Yep. So there is still some room for them to cut, unless we have short-term surprises on core CPI, or, for example, also on the labor market that comes, again, very strong.
If they don't cut, is that the end of the cycle? Just the kind of the tail risk scenario here. Not the base case, tail risk scenario. If they don't cut, is it the end of the cycle, and is the next move a hike?
Yeah, I would suppose that they really say rather a pause, and then they let time, so they will never say we are ending the rate cutting cycle, right? Yep. I think it's taking too much risk there. But then, yeah, for 2026, a hike is a possibility if we have a lot of tariff, if we have a very strong deficit that push up again economic growth, and then they feel that they need to actually slow down again the impetus that we have from fiscal policy.
Yep.
In the next 60 days, not only do we get Donald Trump's inauguration, but 10 days prior, we get, of course, the debt ceiling, which you sort of referenced there. What does that mean for a 30-year in the United States if, I think you made the point that Donald Trump may not address it until later in the year? What does that mean in the interim?
So actually, it's quite positive for net issuance on treasuries, because if this debt ceiling is not passed, it means that they actually cannot come with a lot of new issue. Rather, they will push down the TGA account that they have at the Fed, which is basically their war chest in terms of cash. And that means that they drag that down rather than issuing bonds. So actually, in terms of net issuance, you will have a bit less.
But what does that look like in terms of the yield?
So I would say rather downward pressure on the yields.
So give us a number. Give us a floor. How about this? Give us a floor, give us a range.
So I would say on the 10-year Treasury, we are looking at potentially going to 4% in the few first months of the years. And then if we have this tariff that are implemented, the deficit that is increasing, we have a forecast, yen forecast of 4.6.
We're watching France as well, Laureline, so just to keep our eye on that. Spreads have been kind of stable since we reached the impasse we're in. We're waiting for progress on choosing another Prime Minister. We're also waiting for an ECB rate decision. Is this going to be part of the ECB conversation? Or if there's no signs of other European contagion, does it remain a French issue?
No, at this stage, it definitely remains a French issue. The ECB is looking at 2 things. First, the contagion to other sovereign bond market. We haven't seen that, right? If you look at peripheral spread, they have tightened in the rest of Europe. And then they also look at short-term spreads because that's where you have the most impact from monetary policy. It's on short-term yields. And so far, even in France, it has been quite well behaved. So no reason for the ECB to be mentioning that.
They might be
the contrary.
But
yeah.
France is trading what? The yield 2.89 on a 10-year. Is that a buy? Or is it too early?
So our view is that even though you could have maybe more spread widening if we have more information that is showing political instability and that they cannot come up with a prime minister, the thing what we saw is that you have the bond yield falling. And so, as you said, the yield is actually quite stable around 2.9, and we would expect that to continue next year. So we have this idea of a convergence of yields between the periphery and the core. That's really what we want to see next year and what we're basically playing.
We're already seeing some of that volatility show up in things like the business outlook. People getting very nervous about that lack of stability. Laureline Renaud-Chatelain, we will leave the conversation there. Fixed income strategist over at Pictet Wealth Management. Still ahead on the program, we go to Brussels for an exclusive interview with the Polish finance minister. He's got stocks to cover: Ukraine, defense, of course, the latest on the economy in the Central European nation. That conversation with our very own Oliver Crook coming up next. A crucial time for that, of course, as we gear up to, of course, the new year, a Trump administration, and a potential pivot point for the war in Ukraine. Stick with us. This is Bloomberg.
Listen, I'm not a big fan of common debt. I think Europe facing challenges concerning debt. I think we should put our government finances in order, and at the same time we have to invest more in defense. That I agree on. But in order to invest more in defense, you have to find the room in your own budgets. So that's the message I echo here also in the European meetings. Like, get your finance in order, make tough choices within your budget, and spend more on defense. And I think common debt is not the right approach.
So how does it get done? The Dutch finance minister speaking there to Bloomberg yesterday in Brussels. The defence issue is looming large. Of course, Donald Trump's decisive election win has called into question whether the US will maintain its current level of support for Ukraine and, of course, by extension, NATO. This is Europe, as we've just been hearing, wrestles with political instability in France and Germany. How do they finance a big pickup in defence spending? It also comes amidst reports of alleged Russian interference impeding Georgia's and Romania's ties with the EU and their elections as well. Poland obviously front and centre in all of this, trying to figure out how it can maybe shape this debate over the years to come. So let's pick up on that element of this conversation and go back to Brussels and back to Ollie Crook. Ollie, talk us through this critical moment that Europe now finds itself with. How is it going to square the circle of a need for more defence spending, yes, an issue with how that is financed?
Yeah, Guy, I mean, really, that's at the center of the sort of conversations here in Brussels. When we think about defense spending, we think about budgets bringing down governments at the center of Europe, whether it's Germany or France, but a lot of budgetary debates across all of Europe. And really the question is, because it's not just about getting that spending up to 2%. Most of the NATO countries in Europe now are at 2%. Many of them have exceeded it. Some are not quite there yet. But it's how do you square that with this sort of fiscal strain that we're seeing across these budgets and trying not only to spend more on defense, but spend more in Europe. In order to do that, we don't have the hardware capacity to build the sort of things that these military needs. What the industry needs is arguably front-loading some of that money. And so there are different concepts that are coming out here, maybe a 500 billion euro fund that could go towards that, issuing euro bonds. There's also another idea about the sort of coalition of the willing, where countries could come electively into a program and issue bonds together. That could also include countries outside of the EU, say Norway, the United Kingdom. The problem is all of these are very sort of theoretical right now. So I'm very pleased to be joined by one of the sort of really true leaders on European defense here, is the Polish finance minister. They have got their NATO spending the highest as a proportion of GDP of all of the NATO countries. They're at 4.12%, and I just heard from the finance minister that they're going to get 4.7% next year. So I'd really like to start the conversation there with you about sort of how do you get sort of a European concept? Where are these discussions across the sort of finance ministers over the last few days?
Good morning. For Poland and for Polish presidency, defense and security is absolutely a top priority. So right now we are discussing with ministers of finance of all member states the ways to better finance our security in the coming years. It's obvious for us that the time to act is now. We just cannot wait for 5 years for another budget. We need to take actions now. So this is why we will discuss during ECOFIN Council meetings ways to finance defense spending. And as you said, we need to have way stronger defense industry here in Europe.
And do you think there's a concept that's emerging, or at least ideas that are being discussed at your ministerial level about how exactly to do that, right? Because we've heard about maybe a 500 billion euro fund, or maybe countries coming together and saying, listen, we're going to form a sort of financial defense alliance. We might issue some bonds. Is there something that's sort of coming out clearly? Because some of the resistance that we've heard from, say, the German finance minister has been, well, we're not just going to issue bonds for their own sake. We need an idea to get behind, and that has sort of been absent.
It's a bit premature to say which of the propositions that are on the table will be best. But with no doubt, there is a need for discussion, and our partners are also fully aware of that. So my thinking is that first we need to know what precisely we need to buy, where are our weaknesses, and therefore, after having such a buying list, we need to address it with financing.
Right, and also trying to I think source some of that material within Europe. You were also quoted saying that Poland may also issue dedicated defense bonds. Is that something that you're looking at? Sort of how big are you looking in terms of issuance? How would that work?
It's one of the option. We have no problem with financing our defense spendings. It will be, as you said, 4.7% of GDP next year, but right now we are really comfortable with financing.
Okay, and then the sort of question of sort of the future of also support of Ukraine. Poland has been very sort of supportive of Ukraine, been one of the great sort of champions for the cause. You have the Trump administration coming in. Is there something that more that needs to be done? I mean, I understand that we've also now sort of got the 40 billion or 50 billion from the Russian-backed assets. Are you looking at doing more with the uncertainty of what a Trump administration could bring?
The position of Polish government is clear. Yeah. Our support for Ukraine must be stable and firm. And it will be like that. And of course, I'm really happy that there is this decision of U.S. of passing this $20 billion. It will help Ukraine. Now we need to secure transferring of those funds to Ukraine, as the country really needs it. And Poland will always advocate the interest of Ukraine. As we do know that this is the place where we right now are fighting against Ukraine.
And one of the other
against Russia.
Yeah, no, of course. And one of the other issues that brings with sort of uncertainty the Trump administration is tariffs and trade. But I want to talk about another kind of sector of trade, which is Mercosur. Von der Leyen having signed this agreement on Friday with Latin America. Poland has been very outspoken about this. What is your position? Do you intend to join a blocking minority to block the Mercosur deal as it is?
Our position is very clear. Our Prime Minister said it very openly, that we do not support this deal in this form. And it's obvious because we believe that the interest of farmers in Poland, but not only in Poland, also in other European countries, is not secured enough. And what is more, we have also some doubts regarding the food safety. And therefore, our position is that we do not support this deal in its current form.
And do you think you have enough sort of support to block it? I mean, have you spoken to the Italians and the French, for example?
I'm not the minister of trade, but from what I hear, both France and Italy are not really 100% convinced to this deal.
Right. And then the other sort of concern around France has been a potential spillover effect from what we've seen, the sort of instability. How much of that has been a conversation with ministers over the last few days, and how concerned are you?
Regarding the
French instability, we saw yields go very... Yeah.
Yes, of course, we are discussing that, but even tomorrow we will have a Weimar Triangle meeting with Minister of Finance of Germany and of France in Warsaw. We will discuss the economic situation of European Union, but also for sure we will discuss politics.
Yeah, and one is sort of Poland has also been one of the great sort of bright spots within the European economy. You have an estimate for growth next year of about 4%, 3.9%.
Right.
There are some concerns that there are some risks to that. How confident are you in that forecast, and what do you think could pose a risk to that growth forecast next year?
I mean, forecast is only a forecast, and what we see is a bit of the slowdown in the retail sales in Poland. Having said that, we are still one of the fastest growing economy in Europe, and I do believe it will be like that in next year. We are still confident in the forecast of close to 4% GDP growth next year. For me, it's very important that we need a more balanced GDP growth. We need more investments. This is why our government is investing in infrastructure. In the first Polish nuclear plant, we have secured money for many infrastructure projects. But for me, it's also important to encourage private investments, and this is why we are working hard on some capital markets changes.
And I think potentially one of the risks to your growth forecast, and this is something that some of your colleagues have been very critical of the central bank governor, who has been accused of politicizing his rate decisions because favoring the other party, basically refusing to lower interest rates until after the election next year. Do you feel that the central bank is politicized?
Well, I'm not giving comments about central bank policy and monetary policy council, neither, as I believe that we do need an independent central bank. So as a Minister of Finance, I have to refrain from such comments.
Sure. Well, let me repose that in a slightly different way. Do you feel you have a clear, because there needs to be communication between these two institutions, do you feel you have a clear understanding of what is guiding the central banker's decision?
That's a bit tricky question, and we have of course, there are some problems with the communication with the central bank, but it's not my job to say negatively about what central bank is doing right now. What I'm really interested is, of course, fall of inflation, fall of CPI. But at the same time, we need a positive environment for investments, and of course, lower rates would be supportive.
Andrzej Domański, thank you so much for your time.
Thank you for having me.
That was the Polish finance minister talking about all the issues from defense to spill over to France, and of course, some of the little bit of miscommunication, we'll say, between the finance ministry and the central bank.
All right, Bloomberg's Oliver Cook there, as he said, with the Polish finance minister. We thank you so much for bringing us that interview. Let's go to another place in Europe where, of course, politics are really dominating the headlines. French President Emmanuel Macron planning to name a new prime minister in the next 48 hours, an official close to the president, and also said Macron aims to avoid calling fresh legislative elections before the end of his term in 2027. Bloomberg's Julian Pontus joins us this morning. Julian, pleasure to have you on the program. How are markets doing while waiting for the outcome?
Well, they're giving Macron the benefit of the doubt at the moment. The spreads have gone lower. We're at more or less 75. We reached a peak of 90. So at the moment, they're ready to wait and see.
And Julian, is there a chance then? So they're giving him the benefit of the doubt, and in that is perhaps the benefit of the doubt related to whether he can form a stable government. I mean, do we think that he really can? Yeah. Can he pull together the centre, the left, the centre right, and actually pull together something that's going to last until 2027?
In absolute terms, it doesn't seem quite extraordinary. What he's trying to do is just a grand coalition. And for like German or Belgian or other European viewers, having center-left parties with center-right parties in a coalition is no big deal. But this is France. It has never been done before, and it's really tricky to find the right prime minister who's going to be, not too much on the right so that the socialists can break away from other far-left parties, and, close enough to the left, but not too much, not to break off the conservatives. And it's a very, very difficult task to achieve. So, I mean, we have to wait and see if he can pull it off.
OK, and we know from our reporting that we expect that to happen, an attempt at least, by the end of tomorrow. So thank you very much, Julian. Thank you for joining us. Bloomberg's Julian Pontus with the latest on what's going on in France. Interesting timing of that appointment of a new prime minister in France, if it comes around the time that we are either waiting for an ECB meeting or or in the middle of one even, perhaps. Now, coming up on the programme, stocks to watch, including Inditex this morning. The Zara owner says its crucial holiday shopping season is off to a really good start. We will get into those details because the stock might not be off to a good start this morning. This is Bloomberg. Welcome back, 7:47 here in London. So 13 minutes until we see equity trading for this morning. And it looks as if we could see some red on the screen. US futures look entirely flat. We're waiting for US CPI later in the day. Maybe we'll get to that shortly. Let's talk to Paul Dobson, Bloomberg's Asia Markets Executive Editor, who joins us for 3 minutes on the markets. And in fact, let's start with the China story, Paul, because we've had a lot of enthusiasm at the beginning of the week. That's built into European stocks as well about what China can deliver. Now, is there some scepticism setting in? What do you see?
Yeah, there's certainly the rally that we saw in equity markets that you were talking about, Anna, has run out of gas somewhat. Today, a little bit of a negative number on the screen. And it's the usual story, right? The market is saying, show me the money. OK, it's all very well making these promises and pledges, but we really need to see some detail here. And the concern is that while we have the Economic Working Group meeting, they didn't give us anything before the meeting that might, kind of give the market something to hold on to. So it's a bit of a wait and see again. And every time that happens, people start to, take a bit of profit, get a little bit nervous as well. We saw outflows from some of the onshore ETFs yesterday. So that points to this idea there's a little bit of skepticism there still and a little bit of concern.
Paul, why do I care about today's CPI print out of the United States? People keep telling me that it's not going to influence the Fed's decision on whether or not we see one more rate cut this year.
That's a pretty good question, Guy. And I think that, the way that you're framing it is probably right, because the market is 80% certain that the Fed is going to cut in December. That's the way that the pricing is leaning. So it would take a big upside surprise in the CPI to dislodge that. And while we're expecting a modest acceleration, nothing like that is really on the analyst's radar. So it would be an upset. So I guess, what we could see on the flip side of that actually would be a bond market rally if the number does deliver and we get confirmation that the Fed is going to cut in December based off the numbers, because the market positioning in the bond market is pretty flat at the moment, pretty neutral. So again, there's scope for a little bit of a gain. I think it's also going to start talking about next year now. There's only 2 cuts priced in for next year, assuming that one happens in December. So, could be done by mid-year, and people are going to start to think about how sticky is that inflation? Will the Fed be able to continue cutting beyond the end of this year? And that's going to start to become a factor, particularly as we get closer to Trump taking over as the president as well.
Well, Paul, speaking of next year, let's talk a little bit about China as well. We are getting reports at the moment that Chinese policymakers may be considering weakening the yuan in 2025. If that move were to come to fruition, what would that signal? What's the logic there?
It's straight out of the playbook the last time that we had the tariff wars with Donald Trump in the presidency, right? China allows the yuan to weaken, and that offsets some of the costs that are added onto the goods that are shipped abroad for the tariffs, so kind of cancelling out that impact. It is one of the things that's in China's armory, and the report that's out today from the competition is talking about only a modest weakening, really, compared to some analyst forecasts, which are for a much radical drop all the way to 8 yuan per dollar. So it's one factor, but we're also seeing China pushing back in other places, talking about sanctions on Nvidia, that sort of thing. So there's going to be lots of tension and market volatility as a result.
Certainly something we're going to be keeping a very close eye on. 727 on dollar yuan at the moment. Paul Dobson, Bloomberg's Asian Markets Executive Editor, joining us this morning. Let's get to our stocks to watch. Bloomberg's Lizzie Burden covering it closely. Lizzie, what's on the agenda?
Well, I want to bring you a consumer theme this morning, starting in your favourite, Kriti, Spain. Inditex this morning posting results at 6:30 London time. It says the holiday shopping season's off to a good start. People buying their presents and going outfits at Zara and Pull&Bear. It seems to be weathering the storms in Spain and concerns that the US presidential election result would weigh on consumer spending. But interesting to note, on Tradegate, actually the share's down about 4.6% this morning compared to yesterday's close. So what I imagine traders are looking at is the earnings before interest and taxes for Q3 were actually just shy of analysts' estimates. Here's what the analysts are saying: 16 buys, 13 holds, 3 sells. We'll see how it opens this morning. Next over to TUI out of Germany, also posting results. More signs of robust consumer demand. They've posted a net profit increase for the year to the end of September. They expect more strength in the next fiscal year. And so those shares up 20% year to date. We'll see how they open. And then staying in Germany to Adidas. Bit of corporate drama here. A raid on the HQ yesterday. This is as part of a years-long tax investigation, but Adidas says it doesn't expect to see a significant financial impact in connection to the investigation. We will see at the open, but the turnaround so far has been going pretty well under the CEO. Plucked from Puma, Bjorn Golden. Will this dent its success? You can see the shares are up so far this year, but not compared to their pre-Yeezy debacle highs. This is the 5-year chart, of course. And then if we look over to what the street is saying on Adidas. They're at 17 buys, 12 holds and 4 sells on that stock. Also bringing you up to date on some of the other changes in analyst ratings this morning. We've got Publicis raised to overweight over at JP Morgan. This is part of their pick and mix approach to European media as we look at that uneven macro backdrop for 2025. You've also got Reckitt raised to buy at HSBC and Morgan Stanley raising Nedbank to equal weight. Those are your stocks to watch this morning.
Lizzie, thank you. Lizzie Verdon with the stocks to watch. We'll keep an eye on the retail space in many senses then, because we've had this miss from Inditex. That weighs on sentiment. Yep. But on the other hand, we've got some M&A news in the shape of Zalando with its offer for About You. And certainly that is expected to lift sentiment around some of the UK-listed fast fashion names. So we'll certainly be watching those.
Are we going to see consolidation in that space? About You's up really strongly. It's called plus 60% on the back of this. So it's a 6.5 share in cash offer from Zalando. Zalando looks like it's going to be a bit soft as well this morning. We've got news out of Continental. Its CFO is going to be stepping down. Olaf Schick is going to be stepping down in September. September feels like an awfully long way away at this point. That's a 9-month transition.
This is a bit in the business in the middle of a spin-off of its automotive unit. It was talked about for a long time and looks as if they finally got permission to go ahead and do that. This will give greater independence to their tyre business, which has been profitable, and trying to get rid of the bits that have been less so.
Oh, interesting. I mean, I'm sorry, I have nothing else to add. That was way sassier than I expected to come out. But
she talks about concrete as well.
Anna has.
I'm here all day.
Yes, Anna has a lot of knowledge that I don't. I think it's not showing up. All of these movers that we're talking about, specifically in the German space, are indicated lower, and yet futures are actually the outperformer right now in terms of all the European indexes. I'm wondering if you're going to see a very quick. Maybe shock to reality, some of all parts kind of trade coming up at the opening trade, which, by the way, is only about 5 minutes and change away. We're going to walk you through some of those moves, but broadly, risk sentiment is lower across the European continent. Stick with us. This is Bloomberg.
Wednesday morning, good morning. Let's talk about Tuesday and figure out what happened yesterday, because it might tell us a little bit about what happens Wednesday. European equities sold off into the close yesterday, but then US equities sold off and continue to sell off. And that's maybe why we're seeing a little bit of negative pricing this morning. I thought this morning was going to be boring. We've got all kinds of really interesting stocks that we need to be talking about. There's things happening. Continental, I hear, is fascinating. And we've got a few other stocks that we need to be watching as well out of the fast fashion story. Are those going to bleed in to this equity market session? Or is it the big picture story, the run-up to Christmas and all those Brussels sprouts, Kriti?
I feel like you're just trying to trip me up. You're just trying to make me laugh this morning. I won't fall for it. I will not fall for it. You are seeing red on the screen when you look at the futures picture. Eurostoxx 50 futures down about 0.2%. Your underperformer this morning is the FTSE 100, though, down about 0.4%. We are still waiting for the Prime Minister announcement out of France as well. A little bit of an overhang in French futures, down about 0.3%. But we are seeing individual names in Germany as well. And DAX futures not showing the same pain you're seeing in other parts of the continent, Anna.
Yes, your stocks to watch is brought to you today by Fashion and Sportswear, Kriti. Let's delve into some of the detail we might get here. We might see Inditex on the move, as we were just hearing from Lizzie. The numbers coming through and disappointing, actually, in terms of some of the slower sales growth, 9% revenue growth in the 5 weeks to December the 9th. That compared to 14% a year earlier. So crucial holiday season approaching, and that's the backstory. Zalando, the German online fashion retailer, has agreed to buy this rival e-commerce company, About You Holding. Clearly, About You might move more than Zalando, but I picked the bigger one. So we've got Zalando in focus. Adidas also in focus. German authorities have raided the Adidas headquarters as part of a tax investigation into customs and tax regulations. So we'll certainly watch that one as well at the open. Guy?
OK, let's talk about the big picture, then we'll get back into the single stock narrative and figure out what is happening there. Time for the opening trade. Here it is. Let's take a look at what we're seeing here in Europe this morning. FTSE a little soft out of the gate, not by much, down by a little bit. IBEX is down by 0.2%. Remember, you're going to see the Inditex story being represented by what is happening with the Spanish market at the moment. So that's down 0.2%, falling a little bit. The FTSE 100 continues to drop a little bit as well. Stock 600 down by 0.1%. There's a number of single stock stories that could actually influence the bourses today. Inditex is definitely one of them. Is politics going to influence the French market? Not at the moment. It looks like it's largely in line with what we're seeing elsewhere around Europe. So what is happening below the surface? Let's get back to the sectors and the single stock stories. Kriti.
Well, right off the bat, you are seeing some of your heavyweights actually move it to the downside. So Total, for example, Novo Nordisk, a lot of your French names are the underperformers this morning when it comes to the weighting and the contributions that you're going to see there. To the upside, though, Anna, I'm seeing a little bit of a defensive push when it comes to, say, ASML, for example, among some of the more kind of consumer staples names that we traditionally look at. Those seem to be moving the market. But to me, this feels like a risk-off kind of day.
Yes, it does feel a bit that way, doesn't it? And we're waiting for some of the key stocks we mentioned to open, so Inditex, the bid activity around About You and Zalando. We're waiting for all of those stocks to open, so we'll see what we get there. But yes, the more we look, the more these sectors are dropping into negative territory. We're down by 0.4% on the FTSE 100 now. The DAX still not open, and we only have 3 sectors in positive territory. Basic resources is the worst performing sector, which speaks to that weakness in London. The likes of Antofagasta, Anglo-American, Rio Tinto, all a little bit weaker. We actually had mixed signals coming through from the commodities space overnight, with iron ore prices, yes, a little bit weaker, but I think copper was trading higher. So those mixed signals, though, resulted in a little bit of negativity. Still, the DAX not open.
Come on, get on with it. We need to get some numbers posted on our screens and figure out what is happening. I want to see what happens with some of these fast fashion businesses. I want to see what happens with Technica as well. You are seeing some weaknesses, as Anna says, in the mining sector. Luxury is under a little bit of pressure as well. The China story is interesting. It is a show me the money story now, definitely. I think people have been once bitten, twice shy, maybe, with their stimulus story. So that seems to be in kind of rippling through, maybe into the European space. It's fascinating that the euro and the Chinese yuan are now trading with quite a tight correlation. That relationship seems to be getting more and more important at the moment. So keep an eye on kind of how that European-China story kind of flows through. Zalando now looks like it's open. It is down by 8%. On the back of its acquisition. Adidas is also falling this morning. It's down by 1.41% this morning. So you are seeing some of these German names we were mentioning.
It's interesting, isn't it? Because we've got the M&A news, and that's one dynamic, but that pushes in the other direction versus the Inditex update, doesn't it? So, you know, there's both of those. So although Zalando is down, yeah, as you say, there's this M&A story, and that directly involves them. But there's also a weaker update from Inditex, and I wonder how that ripples through the rest of the sector.
And we are seeing the opening price of Inditex here down about 6% this morning. So we'll see how that all shakes out, which is interesting because the sales numbers came in a little bit higher than expected, but there's clearly something within the numbers that the market is not responding to. We're going to get the details in just a little bit, but let's get an expert voice around here. Around the table this morning, joining us is Elise Bedoy, Head of Research for EMEA over at Citi. Elise, pleasure to have you on the program. Thank you so much. I feel like I want to start with maybe the point that Guy made, which is this China read-through. We've been talking about it for the last couple of days here as we get headlines out of the Chinese policymakers and what that stimulus picture actually looks like. How do you play the China story in Europe?
So basically, Europe has been the unloved market, very much so. It's a consensus almost underweight, and US consensus overweight. So we believe that actually it's the right time to potentially, close some of those underweight positions and look at Europe. We see some upside risk, and most of it is actually China. Some relief coming out of China could be very helpful. And how to look at this, obviously, I would say we've just gone overweight luxury goods. That's a very nice way to play it. So there are some sectors that obviously are going to benefit within that. But broadly speaking, it's a general sentiment because obviously China, plays out in many different ways. In Europe, some cyclicality as well could be helpful. So we've got an overweight on luxury goods, but also an overweight on some cyclical spaces which could benefit.
When it comes to that kind of China maybe pain or overhang, could U.S. economic resilience make that up, especially when it comes to, say, the French luxury makers, for example, given that so much of the mass market story is in the States?
I think a lot of it, Kriti, right now is blurred by, the uncertainty around tariffs. So I'm afraid all of that potential positive that we see that's embedded in Europe that could happen, and all of that overflow that could come from let's say, soft landing in the US. Unfortunately, at the moment, investors are very much willing to see what happens to tariffs. And, when they get implemented, are they laser focused on the sector? It could be luxury. It could be winemakers. But where is it going to happen? And I think, unfortunately, until we see some easing on that, but that's one of our positive cases, are we going to get negotiations rather than tariffs, etc.? That is the moment at which you start playing that.
But okay. Yes, and in terms of the timing then, so you think that Europe is undervalued, you think there's a lot of pessimism out there. We know that European stocks have rarely been this weak in relation to US peers, so relative underperformance has rarely been this bad. So what's the catalyst for that to change? I mean, you've mentioned something around tariffs, and maybe we get negotiation on tariffs. Are there other catalysts that we can look at then, Elise?
So I think the issue is there's not one silver bullet. It's actually a myriad of catalysts that we need to come together and almost like to come together at the same time. So I distinguish, okay, I'm going to try to be, I distinguish the fundamental ones and the I would call that the, the sort of political sentiment ones. So you've mentioned we're waiting for a prime minister in France. Now, that's not going to solve the French issue, right? We have political uncertainty in one market. We've got German elections. We think, okay, German elections could be one nice catalyst. But the broad 5 catalysts that we see, one, probably a ceasefire or something better in Ukraine. And we don't hear much about that right now. We hear so much talk about tariffs. That's one thing. Tariffs, obviously, as soon as we get news that maybe one industry specifically is negotiating rather than going into tariffs, as soon as we get a view in January, for when actually some of the implementation might happen, that's going to ease some of the issues. And I would say that the third one really is China. And that's, some news coming out of that. I would mention one thing that I think market participants are not really looking at, that I think is a huge tailwind for Europe and European markets, and it's basically the strong dollar. And I think the strong dollar is not something that's being featured at all or embedded into things, because people are really looking at news flow and macro news flow.
Yes, and so if the Eurozone is more of an export economy than the United States, is the weakness in the euro going to be more beneficial than the strength in the dollar is going to be an issue for the United States?
And so that balance, and I think generally speaking, it's not something that's been looked at. I have a theory about that, and my analysts would have the same theory, which is that we're right now in a gap in news flow until the full year results. So you don't really have bottom-up information right now. Well, you do this morning. Obviously, retail tends to report at this time of the year, but that's an exception. Most sectors will report towards the end of January, beginning of February. And meanwhile, we're going to have, the ECB tomorrow. We're going to have all this macro news, CPI this afternoon. And so that's blurring, if you want, the bottom-up. I think the bottom-up could be positively impacted by the dollar, actually.
Is European weakness a hedge against US strength? Should I think about it that way?
Definitely so. That's the view of our strategists. Essentially what we have at the moment, we have this consensus overweight in the US, and we think at the moment, that we're going to see things doing much better for Europe going forward.
So it's a relative trade.
It's a relative trade, completely. And when you look at the world, you have the US half the world, in terms of equity market, and then you have Europe, which is within rest of the world probably the lowest value, so probably the upside risk. I would say we need to distinguish. I find that this is a feature. Most market participants tend to forget that Europe is not a proxy for European economies, right? Europe is essentially exposed to the rest of the world, so that is why it's your hedge.
The problem is, though, that it just kind of historically has been. It doesn't historically kind of work that way. I'm curious as to whether or not PMs are biting. When you take this to meetings,
it is tough.
What do they say?
It is really tough.
So there's no indication that there's going to be a change in the trade anytime soon. What would you need to see from PM? Do any of them kind of sit there and go, OK, tell me about that a little bit more?
I think that's the crucial question. We go in these meetings, and I think right now the feedback from investor clients is we want to look at Europe, we want to understand. So I'll give you one trade that is very interesting at the moment that people have been looking into, which is that we've seen a real negative impact on US-exposed European listed names. Okay.
Yep.
So, and it's been broad-based, and there's been no distinguishing between, what actually is tariffs immune or what isn't. So that's one thing that people are looking at. Okay, this whole US exposure has been sold off in Europe, but actually there are probably names that are going to, on a bottom-up basis, do well, even though they've been punished unduly. So that's an example of places where they're looking at.
And that's gaining traction. People are looking at that.
Yes.
Okay.
How much more does Europe have to sell off for this to become a valuation play? And I ask this in the context of China, where we saw such a major sell-off. And even though some of the risks remained around the uncertainty, people couldn't stay away from it because it was just too cheap not to buy. When do we hit that dynamic in Europe?
I think actually we're forecasting European markets up 8%. Our new targets were yesterday morning. IATA put them out, and it's we're forecasting 10% up for Europe and 8% up for the food scene over the next 12 months. In terms of we do need different data. We need probably obviously we're going to hear from China at some point. But we have a lot of news flow in the way before we hear that. But we do believe that over the next 12 months, it will consolidate and we will see that happening.
The negative sentiment around Europe seems to have coincided, and correct me if this is not the right impression, with a lot of the negative sentiment around the auto sector. Is that crucial to driving sentiment? Because I'm not sure we're seeing any solutions to that particular crisis.
No, you're very, it's a very interesting observation. In fact, as we tilt more towards Europe, we've actually just closed our underweight autos and we're now neutral on autos. So it's something we've definitely observed that, we believe that has probably troughed and it's probably linked to that. But, you see bits of news flow that are interesting. I think Japan was talking about negotiating for their auto market, with the US. And so as we see that news flow and as you see the valuation really troughing, if there's any relief, any form of conversation coming from the US, but we won't hear much until January, realistically, then that's going to help. And that is why we think now is the time where essentially Europe used to be a risk to own, probably after, let's say, June time when we had the snap elections in France, the sentiment changed negatively. We think now we're at the stage where Europe, it's a risk not to own some of it.
Great to see you. Thanks for stopping by to see us. Thank you very much indeed. Elise Badeau, Head of Research, EMEA at Citi. Core 6 looks like this. Let's take a look. We were just mentioning some of the luxury names. What's happening with LVMH this morning? Under a little bit of pressure, as you can see, but not by that much. Ferrari's down a little bit. You're seeing maybe a rotation back into some of the AI names. ASML's doing well. Schneider's doing well. Nestle's doing nothing. Novo Nordisk, a winner yesterday, giving back some ground. Carl Zeiss, Zalando, TUI. There's some interesting names out there that are worth watching this morning. Lizzie Burden's got some details as to what is happening with the single stock story.
Okay, we've got a consumer theme this morning. Last I checked, retail was bottom of the basket on the stock 600. So let's start by zooming in on Inditex. Those shares are 5% this morning after their results. Yes, they said that the holiday season is going well, but in fact...
Apologies, Lizzie. It looks as if we have an issue with the microphone, but we were looking forward to Lizzie's thoughts on Zalando. We do have on Inditex. We do have weakness then. As a result of that, as a result of that update from Inditex, the stock down by 5.6%. And as we've said a couple of times, there's this dual dynamic happening in the retail space, fast fashion and other leisure wear names. Inditex then down by 5.7%. Zalando down by 8.9%. Partly the Inditex numbers, partly the offer they've made within their space.
Carl Zeiss is down pretty sharply. Carl Zeiss Meditech is down, missed on the EBIT line, the operating line at the full-year level. That stock looks like it's under quite significant pressure as well, so that's another name that we're watching. Is this narrative going to change a little bit later on? CPI data is going to be the dominant theme, but this morning it is the retail story. Lizzie, I think we haven't fixed the mic issue. We thought we'd fixed the mic issue.
She'll be back. But we haven't now, apparently. Anyway, but we do have Siemens Energy also down by 4.6%. That's an interesting one because that could be some read across from GE Vonovia. I think we might have Lizzie back now.
Are you brave enough to do it?
I'm going to try.
OK, you give it a go.
Third time. Let's go. Lizzie.
Third time's a charm, Anna. Let's start with Inditex. As I say, there was a bit of weakness under the surface in these results. Earnings before interest and taxes for Q3 just shy of analyst estimates, and traders picking up on that this morning. Shares down 5.6%. But staying with that consumer theme, let's flip over to TUI. Out of Germany, they posted this net profit increase for the year to the end of September, but the shares are down. Why? Well, these are decentish results, but if you look back to about August, TUI's seen this big jump, so maybe these results are just not decent enough for traders this morning. Flipping over to Adidas as well, of course, we had that raid on the company's HQ as part of this years-long tax investigation yesterday. Shares down 1.5% now. Does this dent that turnaround in the company under the CEO, Bjorn Gulden, since the Yeezy debacle? Flipping over to Zalando, these shares taking an absolute beating this morning, down now 8.7%. So you've seen the M&A news, the agreement to buy rival e-commerce company About You. our analysts, interestingly, at Bloomberg Intelligence have been saying that it's going to need significant logistics efficiencies to pull this one off. So Zalando paying a hefty premium for what analysts see as a pretty rocky company in About You. We also have, if we flip over Publicis, we had a change in the analyst rating there. JP Morgan upgrading it to overweight. And in fact, media is, as last I checked, the best performing sector on the Stock 600 this morning, and Publicis top of the basket, higher 2.5%. Finally, Guy, you said to keep an eye on the French banks because we're awaiting that announcement, of course, of the French Prime Minister. Let's flip over. We've seen a pretty mixed picture for BNP Paribas, SocGen and Crédit Agricole. Looks like we're going to get more of a reading on what they reckon on the politics when we actually get a name.
Yes, indeed. Waiting for that by the end of tomorrow. Lizzie, thank you very much. Bloomberg's Lizzie Burden then with the latest on those stocks that are moving. We'll get more details on one of the stocks you mentioned there, Inditex under pressure. More on that story coming up next. This is Bloomberg.
The IBEX is down by 1.3%. The reason mainly for that is Inditex, as you can see. Down pretty sharply this morning. This after the owner of Zara reported slower sales growth at the outset of the crucial holiday shopping season. Rodrigo Huela joining us now from Madrid. Numbers are a little light. Why?
Why Inditex is down? Mainly, there are two. This is a quintessential Inditex story. Numbers are good, numbers are solid, they're good numbers, but expectations are so high and its recent track record is so strong that any kind of slowing down in those numbers sends concern around across investors. To this, we also have to add the fact that the share is up about 40% this year, so there has been quite a bit of profit taking. So you have a combination of two things. Numbers are strong, but slightly below what people were expecting. We see it in things like sales growth, where people were expecting maybe 10 or 11% for the first few weeks of the quarter, and they're actually at 9%. And we also see it in a slight easing of the EBITDA, of the gross margin. And then the second point, as I was saying, is profit taking.
And is this a red flag, Rodrigo? Does this, I mean, it seems to be taken quite negatively by the market. The stock down by more than 5.5%.
Yes, so since the pandemic, Inditex has been growing a lot and with hugely, very strong numbers. So it has set a benchmark for itself that is really, really high. And I think that with these numbers, people may be coming to realize that that is not something we should always be expecting, that is not something that will happen every single quarter. So in that sense, it may be a bit of a red flag. But there doesn't seem to be any indication that this is, the start of the end or a big problem or huge issues. In fact, most analysts today were saying that they still expect their annual forecasts to be met.
Rodrigo, to what extent is Inditex the bellwether for the industry as a whole?
It is a bit of an outlier. I mean, when you compare it to its peers in the rest of Europe, it is always, or it has in recent quarters, recent years, been performing quite well and much better than the rest, in fact. So it's not always easy to look at what they do and compare it exactly and do a read across with everybody else in the quarter. So it's a bit risky to say, okay, if this happens to Inditex, it definitely means this will happen to the rest. However, whenever sales growth at Inditex slows, it is pretty safe to assume that something similar will be happening in the other players in the industry. So if Inditex's growth is slowing, it's unlikely that everybody else will be growing faster.
And those shares, of course, as we speak, down just shy of 6%. Bloomberg's Rodrigo Orihuela giving us that update out of Madrid. We thank you so much for walking through it. Sticking with retail, a story that some of us are very passionate about. TikTok Shop has made its Europe debut. On Tuesday, TikTok's in-app shopping features launched in Spain as well as in Ireland. That's exciting. Is this where you, is this where you shop?
I was there.
Daily.
Yep. Often. Never. This is interesting in as much as this is coming at a time when obviously the business is quite under pressure in the United States. But you've seen the politics around TikTok is extraordinary at the moment.
Yeah, absolutely. One of our opinion writers talking about this in the context of NVIDIA, saying the Chinese go after NVIDIA, the US go after TikTok, and, you know, there might be very genuine concerns about the way that it's used in politics as well, and we saw that in Romania just over the last few days or so. So that looks as if that question will run and run, even if we also get to do more shopping.
And all part of that kind of delisting debate within the exchanges as well that we're seeing in New York.
Let us turn to delisting. London's IPO market has declined 9%, or linked to the size of the listing market this year, with only $1 billion raised, pushing the UK to 20th place in the global IPO rankings. It's been leapfrogged by upstarts including Oman, a market with that's just 1% of the size of the UK, as well as Malaysia and Luxembourg. Let's get more details. Bloomberg's Sweta Gopinath joins us. And so this has been a sorry tale for quite a long time then, Sweta, hasn't it? So what's gone wrong for the UK's IPO market here?
It's not just one factor, it's sort of a confluence of factors. The number one factor, I suppose, is the valuation disconnect we have here in the UK. The UK trades at a steep discount to the US and to much of Europe as well. So there's little incentive, really, for issuers to come list in the UK market. The other issue is that investors in London tend to be very yield-focused. Traditionally, this market has been focused on dividends rather than anything else. And the types of companies that tend to come to the IPO market are more growth-centric, which means they can't sort of muster up the kind of buy-side demand here that they can elsewhere.
In terms of what the competition that the UK has right now, what is it? Should we be thinking about the UK? Anna was making a great point earlier, and I was like, this is a really smart thing to say. The UK market is just to pick up on Kriti's earlier comment, the UK market is a takeout target market at the moment, isn't it? In some ways, it's ahead of the curve in terms of attracting private capital. That's a valuation story. But should we be concerned about what is happening here if companies are simply going private and exiting the public markets? That's a theme that's happening across finance.
Because we were at this, Women, Money and Power event yesterday that we were running here at Bloomberg, Sweta, and you couldn't move for commentary around private markets.
Yeah, de-equitization is definitely a trend globally. It's not as if the US is immune to this. But I think the problem we have here in the UK is that, on the one side, we have de-equitization, all these companies being taken out. But these companies are also being taken out at a faster clip that new companies are entering the market.
Right.
In other markets like the US, it's slightly more balanced.
Doesn't that mean just that we're ahead of the curve? We're just privatising our markets, isn't that? We're all in on the private market trade. This is I'm joking. Yeah.
Well, sort of though, right? Apollo and KKR, they're part of the indexes now. It's true.
Yeah, but I guess, we'll be left with a market which offers very little for public market investors, right? If our market continues to shrink, if we have fewer listed stocks, and there isn't a real way for people like us, for you and I, to access private markets yet.
And there are IPOs happening, but just a lot of them are happening in the Middle East, is that right?
Yes. Yeah. So traditionally, again, international companies used to come to London. Now they're all listing in their home markets. Indian companies, Middle Eastern companies, companies elsewhere in Asia are choosing to stay at home rather than come to London because of this big valuation disconnect.
So that appeal of London as kind of that international hub may be disseminating as well. Bloomberg's Sweta Gopinath walking us through some of that story. She covers a little bit of everything. Deal activity, IPOs, private capital markets. She does it all. We thank her so much for coming up on set. Coming up on the program, world leaders weighing the consequences of President Assad's downfall in Syria. Timothy Ash from RBC Bluebay is going to bring in perspective next. This is Bloomberg.
30 minutes into the opening trade, this is what markets look like across Europe, going nowhere in a hurry, to be honest. We are waiting for CPI that's going to come out of the United States a little bit later on. How big an impact will that have on the Fed? The mood music I'm hearing is not very much, but does it set the tone maybe for rate cuts or no rate cuts going into 2025? Geopolitics ever present, it seems, at the moment. Let's talk about the latest iteration of the surprises that we've had out throughout this year. The stunning fall of Syrian President Bashar al-Assad has blindsided so many foreign governments and unleashed a struggle for territory and influence within the region. The main losers, it appears at this point in time, Moscow and Tehran. The clear winner, it seems, Ankara. Joining us now, Timothy Ash, Senior EM Strategist, Sovereign Strategist at RBC Bluebay and an Associate Fellow at Chatham House. Good morning.
Good morning.
We're just joking as he sat down. You're not surprised by many things. Syria feels like it could be one of those. How did it happen so quickly?
Well, absolutely. I mean, if you think of the key driver, Turkey wanted to force Assad to the negotiating table. It had problems with 4 million Syrian migrants domestically. There's been a rise of nationalism in Turkey. They wanted Assad to basically make the country a better place to live, so those Syrians came back. And also Turkey obviously has an issue with Kurds in the north. It wanted a stronger central state makes their drive for the separatism, etc., weaker. But I don't think the Turks even thought this would happen, right? And they were surprised. But in the end, they went with the flow, right? Yep. I mean, momentum was behind the HTL. The Turks saw that they could get total victory over Assad, and that would be a great victory for Ankara, as you mentioned, and that's proven to be the case.
Is the Middle East more unstable with or without Assad?
A very good question. I mean, obviously there's loads of euphoria at the moment about Syria. I mean, Syrians, are euphoric about what's happening. I mean, the scenes from some of the prisons, amazing. Extraordinary. But it's going to be very difficult, I think, to stabilise this country, right? Remember Libya, remember Iraq. Yep. You've got multiple ethnic groups in Syria, multiple militias who are fighting each other rather than fighting Assad. I guess the plus factor is Turkey is a dominant player. It has a real interest in making sure this country works. I think the Gulf states will want to put a lot of money to work as well. They have that interest as well. Turkey, again, will benefit from reconstruction, all that kind of stuff. Syrian migrants will come back. It puts the YPG, the Kurdish separatist force, in a box in a way. But you've probably got outside actors that are still going to pay a malign impact. Iran. What is Iran going to do? Yep. Israel, probably its actions, I mean, it's in its own defence, it would argue, taking more territory around the Golan Heights. Yep. Hitting, I mean, the biggest air raids by Israel on Syria in 50 years, taking out the whole of the Air Force, air defences, all those kind of things. I mean, you know, there was a possibility, I guess, for a reset in Syria-Israel relations, and actually Israel's actions have set that back, right? Egypt was very annoyed by Israel taking Syrian territory. You know, that's a complication as well. So, I mean, it sets off this new administration on the back foot and in a bad place in terms of relationship with Israel.
But sticking with that Turkey story, Turkey's always been kind of the negotiator of sorts between Russia and Ukraine when it comes to the grain deal, right? And then I'm curious, does that role continue? Does that get amplified as we talk about Donald Trump coming in, potentially negotiating some sort of ceasefire? Is that a partnership that Donald Trump and Erdogan may foster further?
Well, it's an interesting one. I mean, Turkey, the Russia-Turkey relationship was going into a difficult place in recent months because the Americans had pushed back on the Turks on sanctions, right, secondary sanctions. The Russians weren't happy with that. But now the Russians, if they want to keep the Tartus naval base in Syria, they have to be nice to the Turks, right? And the US sanctioned Gazprom bank, that made it complicated for Turkey to import gas. It needs the gas. Russia will have to give Erdogan something to be able for Russia to be able to keep something on the ground in Syria. I think in terms of Ukraine negotiations, Russian weakness has been exposed in Syria. That improves Zelensky's negotiating position. Trump met Zelensky with Macron at the weekend, and the messaging from Trump, I think, was quite supportive of Ukraine. Again, highlighting Russia's weakness. Weakness of Iran. I mean, that means Iran has been supplying a lot of drones and munitions to Ukraine. Will it still be able to? I mean, it will be thinking about its own defence rather than helping Russia out. Everything points to negotiations between Ukraine and Russia sometime in the new year. Yeah. Russia's now on the back foot. That helps Ukraine.
Does that show up, though, in the markets? Does that show up in Ukrainian bonds? Does that show up in Eastern European bonds as well as we get this kind of tit-for-tat negotiations and developments? Does it show up in the markets?
Well, it actually has done. Ukraine's been one of the best-performing bonds in the last 3 to 6 months because people expect peace talks. They expect peace talks. They expect some kind of deal. They expect a lot of reconstruction recovery money to go into Ukraine. I mean, it will work. That story will work if the West is able to ensure security in Ukraine. If it's a proper peace, the peace holds, Putin doesn't go in again, and that's all about security guarantees. Is it NATO membership? Is it individual bilateral agreements between NATO countries and Ukraine? Is it just supplying Ukraine lots of kit so it can defend itself? I mean, that's the key. I mean, other interesting trades we've seen in the last couple of weeks, actually, Lebanon has rallied massively. It's been one of the best performers now in the last couple of months. The assumption is The weakening of Hezbollah, further accentuated, I guess, by what's been going in Syria, means that Hezbollah have to step back, play a more positive role in terms of election of a presidency in Lebanon, formation of government, and maybe then a reconstruction story also in Lebanon. So, I mean, there are some winners from a market perspective from all these developments.
Yeah, really fascinating to watch that play out. In terms of the Turkey story, Tim, clearly the refugees and migration flows have been a big way that this has impacted on European politics over many, many years. There are 3 million refugees in Turkey from Syria. Turkey would like some of them to go back. European governments have already started to not accept applications from Syrians because they say, well, you know, you may be able to go back soon. What should we know about the role that these play? Because there was a lot of money changed hands between Europe and Turkey for paying Turkey to keep some of them within their borders instead of allowing them to come to Europe.
Turkey's still a key player for Europe. I mean, if Syria is going to work, Turkey is going to have to be very active in working with politicians, particularly the HDL. I mean, it obviously had al-Qaeda links. It's been sending a more inclusive message. Why? Because I think Turkey's been coaching it. It's been telling it what it needs to say. And actually, the fact that, you know, the defeat of the Assad regime happened so quickly, I think, was a part of the messaging out of HDL, that we're not coming after you, we're only going after the really bad guys, the guys who were running the prison, or Assad himself, but we want to build a more inclusive country. And if that happens, then, you know, a lot of Syrian migrants will come back. I mean, it was extraordinary scenes over the last few days. I mean, 200,000 Syrian migrants have returned from Turkey in the last, like, 24, 48 hours. You know, I mean, it's a potential stabilising factor for Europe if Syria can be made to work.
And do you see signs of nation building that look at all convincing? I know it's extremely early days and everybody is just, quote-unquote, watching.
You know, it's very, very early. But, I mean, they're positive signs, right? I mean, the HDL guys suggesting that the incumbent government can stay in an acting capacity. I mean, that's extraordinary, really, given the messaging around HDL prior to this. And, you know, designated terrorist organisation, the West thinking about whether it takes that designation off. I think it's going to have to. Positive stuff. If it doesn't work out, though, I mean, and we go back, I mean, you'll see different Syrian migrants leaving the country. I mean, Alevite community is a big community. Syrian Kurds, for example, may opt to leave. I mean, that could be, you know, Sunni and, you know, pro-rebel refugees could come back, but their opponents could leave the country, kind of a swap of migrants.
What does a weaker Russia mean for Europe? Not I'm talking about Ukraine, but places like Romania. What happens in Romania if Putin is weakened?
Well, I'd say a weaker Russia, longer term, is great for Europe. Because Russia is a huge security threat to Europe. So Russia needs to be defeated in Ukraine. We need a peace that, as I said, is secure. I mean, you mentioned Romania, very interesting elections. Obviously, we've been watching another incredible, extraordinary situation. I mean, the cancellation of the second round of the presidential election, I guess, showed that this is really important for NATO, for Western security. They clearly identified in their minds that this was a Russian special operation, right, to get Georgescu into the second round. And the messaging suggests that he won't be allowed, one way or another, to win this presidential election. This is existential for Europe.
Why was the ruling by the judge, by the court, in Romania, why was it objected to then by seemingly so many other players, opposition and people who were trying to take on the pro-Kremlin camp? It seems strange that it was sort of criticised by many sides.
Well, I guess, you know, one wouldn't want to do that normally.
Yeah, you wouldn't want to be in that situation.
I mean, Lasconi, the pro-EU candidate, at that point seemed to be winning in the polls. They seemed to be getting their message over that, you know, they argued this is a Russian candidate. It's Russia versus the EU. Romania's EU future is on the line. We have to support the pro-EU candidate. The polls suggest she was getting that message over and would have won. So she didn't like the fact that, you know, she was going to win in a fair and square election, and that was taken away from her, I guess.
Connect the dots for us between Romania and Georgia. And I feel like those are the two countries that have been kind of mushed together in the news flow with, say, Moldova, for example, as well. But the fact that Georgia's protest broke out in terms of the EU extension, does that create a path in terms of how we think about Ukraine, Poland, others that are maybe thinking about joining the EU?
Well, the Georgia is just a rerun of Ukraine circa 13-14. Absolutely. I mean, it's pretty extraordinary, right, the similarities. You know, Yanukovych was going to join the EU or sign an association agreement. Russia came in with a financing package, I guess, read the riot act to Yanukovych, and then we had the demonstrations, right, and the rest is kind of history. And same in Georgia, right? I mean, you have Georgia Dream essentially going back on the population's EU aspirations, and we're seeing it play out. Clearly, it looks like Russian agents, Russian security types are helping Georgia Dream, beat the demonstrators. Beat the demonstrators, basically. It's a real... These are all the front lines between Russia and the West.
Does this go away if you get a peace deal in Ukraine? Does it get heightened if you get a peace deal in Ukraine? If Russia is struggling in places like Syria and, by extension, Africa, does it refocus attention back into Europe? What is the game plan in that kind of scenario for a weakened Putin, who is clearly going to need to exert his influence somewhere? And like that western border obviously is the area that historically has always been, you could argue, the biggest focus. Does this get greater or less in terms of the influence he's trying to push into these regions?
Look, Putin is a malign actor, that's clear.
Yep.
Right? He invades countries, he intervenes in our elections,
yep.
He does cyber attacks, he messes up with our cabling in the seas. He does everything to disrupt our systems of government, right? Whatever happens in Ukraine, the threat from Putin will remain as long as he's in office. And I think Europe is waking up that they have to get serious about their security. And obviously Trump has suggested he's not that willing to fund European security. You know, we have to spend more on defence.
How much? Do you have an idea in your mind as to how much money Europe needs to spend?
Well, we have to go back to where we were in the Cold War period, right? You know, pre-89, 91.
Yep.
I mean, we were spending 3% of GDP plus, right? So think, NATO is struggling at the moment to get to the 2% defence target. 3 to 4%. I mean, it's big numbers. Hundreds of billions of euros a year extra in defence, whatever happens, if we're serious about our own security, and I think we have to be.
So that's about physically protecting democracy, in the tech landscape, protecting democracy. I mean, the role of TikTok in what happened in Romania, really quite incredible, Tim. I mean, does this focus our attention once again on the use of those platforms in election meddling?
Well, it just underlines that, modern warfare is complicated and asymmetric. Putin attacks us, malign actors, you could name them, attackers in various different forms. So we need to be cleverer. We're not very clever, unfortunately, at the moment, right? I mean, Putin's threats were obvious for a decade and a half. We did nothing about it. We didn't take it seriously. The Germans thought it was great to buy energy from the Russians. Many think tanks were clear-cut in the risk, and our politicians ignored it. We need to wake up and get real. Fortunately, it looks like we are. Hopefully it's not too late.
Time to reread the Clausewitz. Tim, thank you very much indeed. Timothy Ash, Senior EM Sovereign Strategist at RBC Bluebay Asset Management. Thank you very much indeed. Coming up, why the airline industry is expecting sky-high demand in 2025. I interview with the IATA Director General, Willie Walsh. That's next. This is Bloomberg. Welcome back. So IATA says the global airline industry is set to earn $36.6 billion in net income in 2025, driven by a record 5.2 billion passengers. It's a little tick up from where we are this year. Are we plateauing? What's happening? Well, I spoke to IATA's Director General, Willie Walsh, on the lobby group's annual forecast. As well, we talked through his expectations for the incoming Trump administration and what impact that will have.
I think consolidation is a positive for the industry, and quite honestly, I believe it's a positive for consumers because, you have an industry now in the US that's capable of investing in products that otherwise they wouldn't have been. If you think back 10, 15 years ago, the quality of the product in the US severely lagged the rest of the world. So consolidation will help, but it's not the only thing that needs to happen.
Do you think it'll be easier under a Trump presidency?
I think the indications are that it probably will. I think the Spirit JetBlue merger probably would have gone ahead under a different administration. When you look at the counterfactual, the fact that Spirit has now had to file for Chapter 11 demonstrates that you're not actually keeping competition in the market by preventing these mergers going ahead. Quite honestly, you risk losing competition in the market. So I'm hopeful that we'll see a different regulatory approach being adopted by the Trump administration.
You dedicate quite a lot of time in the report to the Trump presidency and the risks and rewards that exist coming from it. Which do you think is greater? How substantial are the risks surrounding this industry? We're spending a lot of time talking about tariffs at the moment. That could impact the supply chain story that you've already referenced. We've seen travel bans in the past. How significant a risk for global aviation, for US aviation, does the Trump presidency represent?
I actually think Trump presidency, based on what we've learned from the first administration, is a net positive. There will be challenges and there will be opportunities. I expect them to adopt a completely different approach to regulation. I think what we've seen under the Biden administration was heavy and unnecessary regulation, often, I think, for generating headlines rather than genuine consumer benefits. So I think that will change. I think the approach to oil production will assist with a lower oil price. So I think there are significant positives and some potential drawbacks. But if you learn anything from the first administration, I think you'd have to see it as a net positive for the industry.
What is job number one for Sean Duffy if he's been nominated, if he becomes Transport Secretary?
I think it would be to roll back on the heavy-handed regulation that we'd seen under the previous administration or the current administration. As I said, I think many of those regulations were introduced to generate headlines without seriously understanding what was the impact going to be on the industry or the benefit that was going to accrue to consumers. We're optimistic that we'll see a more realistic approach to regulation. Regulation is important. It has a role to play. But the answer to every problem is not to regulate it. The answer to the problem is to understand the cause of the problem. So the cause of delays in the US, principally because of air traffic control, and that's because they don't have sufficient air traffic controllers. You're not going to sort that out by regulating airlines because you're not addressing the actual underlying problem. So hopefully this incoming administration will address the problems and make it better for everybody.
Do you know the incoming commission will do the same thing in Europe?
Yeah, it's a great question. I take a lot of comfort out of reading the Draghi report. I think that was a very positive development. I think it needed to be said, and I'm pleased that we now have a report that highlights the need for Europe to be concerned about their competitiveness on a global scale rather than fixated on competition within the single market. We have seen a lot of regulation in Europe. It is very heavy-handed. It doesn't address the underlying problems. I'm optimistic, actually, that the development with a new commission in Europe and a new administration in the US may lead to a more sensible regulatory environment.
IATA's Director General, Willie Walsh. So two things really going on in this industry right now, one of which is there's a massive supply chain problem. Boeing's got issues, Airbus has got issues, Pratt & Whitney's got issues, GE's got issues, Rolls-Royce has got issues. All of that is impacting the availability of new aircraft, which is going to make it really hard, by the way, to meet sustainability targets. And the other issue is just the massive regulations that surround this sector at the moment. Willie clearly sees a need to reduce that. How far will the Trump administration go in that process remains to be seen. He talked about making, when he nominated Sean Duffy to be Transport Secretary, he talked about making the flying experience in the United States better. Does that mean less regulation or more regulation? I don't know yet.
And does it mean some M&A? Because Willie Walsh seemed quite positive on what this means for lower regulation in the United States, also quite positive on what it means for M&A.
And this is something that has bipartisan support, by the way. This is something that I think there were just hearings in Congress where Republican lawmakers had grilled some of the airline CEOs on check-in fees and when they were incentivizing, say, gate check attendants, for example, to actually bring in more because there's an actual physical incentive that they get when you check in a bag. At least that's what the grilling was in Congress. So that's something that not just Republicans are talking about, but Democrats as well.
If you talk to the airline bosses, they talk about the FAA. They need to staff up, particularly with air traffic control. It's a problem here in Europe as well, but it's a real problem in the States at some of the key airports. There isn't a sufficient level of staff, and that's where you're getting some of these huge delays that are kicking back through the system.
Sorry, I was going to say, in planes, trains and automobiles news?
I can go to buses as well.
There
It's
you
not
go.
planes, trains and automobiles. I guess the automobiles
I can do
probably...
anything.
I can tick all the boxes when it comes to the transport story. A little grounded maybe more on the buses story. So tonight is going to see the premiere of the latest episode of Bloomberg's Chief Future Officer series. In it, I speak to the CEO of Flix. Have we heard of Flix before?
CFO, yes.
CFO,
Flix,
yep.
Crucially, yes.
So this is a German tech transport company. There's a bus, there's a Flix bus. So what this company does is basically take its tech model, which is about ticketing and schedules and things like that, and then use local operators basically to feed into that system. It's basically using it to take over the global long-distance bus market. Earlier this year, it issued an IPO. It's gone for private money, which is interesting, coming back to the theme that we've been talking about. So it took money from EQT, it took money from Kuhne Holdings in terms of driving itself forward. Anyway, that premiere a little bit later on in the United States tonight. You can see that tomorrow here in Europe at 6:30 p.m. London time. We'll maybe play some of the sound tomorrow. I know you guys are into the bus story.
Absolutely.
Long-distance buses.
Competition from long-distance buses with aviation, that sounds like it weighs on inflation, which takes us to our next conversation. I'm stretching slightly because this is over in the United States. We are looking for inflation data out of the US later. Forecasters are expecting that the data will show a fourth straight month of firm increases in prices. Bloomberg's Valerie Teitel is here to tell us what we need to know. So it's all about this, the stickiness, I suppose, in a sense, of this inflation print now.
Yeah, the core CPI metric, a lot of eyes will be on that month-on-month. We could get 4 straight month readings in a row at that 0.3 metric, which is important because the 0.3 is going to take us farther away from the Fed's 2% target. And I thought it was really interesting that this print today has the smallest implied volatility in the equity market priced in, which goes to show either we've gotten way better at forecasting inflation or perhaps last week's payroll report really cements in that Fed cut next week. We will need a substantial hot reading on today's print, I think, to move the dial on today's Fed on next week's Fed meeting.
Today's print matter?
You know, that's a very good question.
Well, we get PPI tomorrow, don't we? Which is where the PCE reading comes in, doesn't it? So yeah, maybe tomorrow we'll be talking about that. But I'll say it now in case we don't get time because it's the ECB.
I thought all we cared about was payrolls. And here we are saying we also don't care about inflation and we also don't care about all these other things. I don't know what the bond market trades off anymore. It's very confusing.
Look, it's going to trade very much off what we think about the new Trump presidency, and a lot of that is just full of questions and unknowns, especially what we heard from China just earlier today, that Reuters report talking about China is mulling a weaker currency. That is very much a reaction to very much a tit-for-tat tariff fight.
So the fiscal, potentially over the monetary, over in the United States. Valerie Teitel giving us a preview of that CPI data later today. A reminder that the U.S. Treasury Secretary Janet Yellen will be speaking exclusively with our very own David Gura. We have that interview at 3:30 p.m. London time as well. I believe that does it for the opening trade. The markets are a little bit mixed. You're seeing futures over in the States marginally higher. Emphasis on marginally. The Pulse is up next. A stellar lineup there as well. The market story continues. The countdown to the CPI story continues. European stocks in the red. Stick with us. The Pulse is up next. This is Bloomberg.